Mira Business FM, where business comes to talk.
It's the morning drive on Mira Business FM with me, Tim Elliott, and now it is financial advice. Not really advice, financial direction, financial planning, financial consultancy, stuff about finance with James Thomas, who is an independent financial consultant. And how nice it is to see you.
Likewise, morning.
Good to have you here. So today, a couple of things to talk about today, James. First of all, and I asked you this last week, and you said, no, I can do this. This is fine. And I think it's a question that lots of people who seek advice from somebody like yourself, a licensed financial consultant, I think people wonder, and you're a little bit sort of afraid to ask, how you make money, from the advice that you offer, because it's not as though, people book an appointment and they pay a fee to see you. It doesn't work that way.
No.
It works in a different way. So we'll run through that a little bit later, and I appreciate you being, open to talking about it, because I'm not sure that everybody would be.
No, but again, like I always say, ask the question, because if the advisor is not happy to answer it, it should raise alarm bells.
It should raise a red flag.
Yeah,
absolutely.
And it's certainly one of the things that I would always happily talk about. I know I always say we're not a charity, and to think there's not money being earned somewhere, dare I say, it's slightly naive. There is always going to, we're doing this as a business as well as to provide good quality advice, but in return for that, we're remunerated. Yeah. And I would always, in fact, it's something we always like to cover off, usually in our initial introduction, before we even open that fact find document that we've mentioned many times. Who we are, a bit of description about our company, a bit of description about ourselves. The independence is something that I always like to emphasize. We're not tied to a particular company. But then as part of that is then how we're remunerated. Because clients need to, or prospects as they are at that point, need to know how we get paid.
Well, that's why it's important that whenever I would introduce you, I would always say independent financial consultant. So I could, in theory, ask you anything about any product, because there is no, to use that phrase, you have no skin in this game, particularly until obviously, if somebody asks for a product and there's a commission, whatever, that's a different thing. But also, it's anybody that provides a service, and it's a service that is at a reasonable level of professionalism and everything else, then there's a fee for that.
Yes, accountant, lawyer, doctor. Yeah. Perhaps I'm being a bit big-headed to put me in those categories, but nonetheless, all of those you would expect to pay for their time.
I wouldn't ask you to check my particulars, I've got to be honest with you. But
nor would I be able to do so. But you get my point. A professional service, you would expect that person to get paid for the service they're providing.
You would.
And just as an aside, I think it's been one of the things in the UK press, and I think it would have reached here, the car finance. It was described as mis-selling, but it wasn't so much the mis-selling, because I think most people wanted those cars and were very happy with the product they received. Yeah. But the inference was that they hadn't realised that the salesperson was getting paid for arranging that finance deal. Okay, yeah. Now, I'm sorry, I would suggest that that's slightly naive to think, again, you've received a product, there's a person sitting there in a fancy showroom, or perhaps not so fancy showroom, but nonetheless, there's a showroom, there's a car, there's a transaction has taken place, to think that part of that transaction cost is not being paid to that person for providing that service is, now don't get me wrong, some of those deals would have been perhaps slightly
inflated, I'm guessing.
But the vast majority would have been perfectly agreeable to both parties in that transaction. Okay, in my opinion. But I thought, again, my bigger picture is to think that there was not a commission or fee being paid. So, come on, guys.
Yeah, you need. I take your point on that. I mean, I guess there's very much a grey area in lots of instances, not all, but in lots, between fee-based sales practices, commission-based sales practices.
This is true.
And the grey area of not being as transparent as you might be, or using or employing a hardcore sales strategy and over. You know where I'm going.
Yeah, absolutely, and that's always the risk with a commission-based product. Is it? And I'm not shying away from that. I've mentioned it in the notes I sent to you. There have been instances that there's very much been mis-selling or overselling of a product for financial gain of the advisor as opposed to the benefit of the client.
Second half of this show as well, I just wanted to just note that we're going to look at the idea is kind of an end-of-year health check, really. The questions that you might want to ask yourself ahead of those New Year's resolutions of, eating less, going to the gym, signing up for a membership for the gym, losing the membership for the gym, not bothering to go to the gym, all of those things that we all do. But so we'll do that a little bit later on. But let's get straight into, we've pretty much been there, really. People need to know what they're paying for and for the advice that they are receiving. It's reasonable to assume that there is a fee at some point down the road, and it's not that you run away from it. You said something earlier on. We're not a charity. You're in business. You want to make money and grow a career.
And again, that's not to sound hard-nosed or uncaring. I think you've known me long enough to know that I very much care about the advice that I give to my clients. But we're here to still. There needs to be some remuneration, because otherwise we go out of business. We have, if you're working, you mentioned very, very clearly there, which is the key point, working with a licensed, regulated financial consultant advisor. To get those licenses costs a huge amount of money.
It does, yeah.
The order of 5 to 10 million dirhams. So that's a huge amount of capital that has to be lodged with insurance authority and the central bank. Yeah. So to think that we're not doing this in an ethical and well-meaning way, it would be very short-sighted, because if you were to complain, that's one of the reasons why there is that pot of cash that's left as a deposit, because if there were to be significant cases of mis-selling, that money can be allocated to those people who have been mis-sold.
Yeah, I mean that's well over $1 million to nearly around about $2.5 million that's lodged, and it's an interesting point to kind of reinforce, really, that the financial advisory license is a central bank regulated license. Yes. That bond or deposit or fee sits with the central bank, and whoever has placed that has a company formed to offer financial advice. That's how it works.
Yep. But in the meanwhile, you also have a very strict compliance requirement, so that that ongoing advice is monitored on a case-by-case basis. So there's many checks and balances now, which is why even more reason that you speak to someone who is working for a licensed company, because that is your fallback position. That is your protection.
Okay, so that's the first fee to think about. Yes. Not that that's a commission to you, but that's the first kind of big amount of money, and it should offer some a feeling of, well, at least some, I don't know, give you a little level of confidence for sure.
I would hope so.
Well, let's start with the general view. Commission. Yep. How fees work? If you, how do you make money? Where do we start with that?
Well, I guess, what is a commission? A commission is a payment that's made to us from a company for placing a particular piece of business, a case with them. So rather than the client paying us directly, that fee is generated from the product that's sold or recommended to them.
Okay.
That's as the broad brush definition, as opposed to you coming in and we saying, right, we're going to charge you X dirhams per hour, write us a check. or bank transfer. I know we don't write checks anymore, but the principle is
I was
still the
looking at you
same.
blankly then, write you a cheque. Is this 1985?
It's not that long ago that we still had checks here, but you know, the principle is the same.
Actually, no, checks are still prevalent, aren't they?
Yes.
Most people pay their rent by cheque, to be fair. But
a bank transfer,
Yeah.
or a physical amount that's paid for that time, generally would be on an hourly or a case-by-case basis.
all right then, or an agreed fee.
Or
for
an agreed
particular...
fee for a particular piece of work.
Right, okay. Life insurance or CIC?
Yep. Again, I mentioned this because with the product itself, again, as we always say, life insurance is very straightforward, sadly. You're either alive or you're not. But with a critical illness, there's a...
CIC, critical illness cover.
Critical illness cover.
Use an acronym.
Yep. So 3-letter acronyms, full of that in this industry. As well as the conditions that are covered that are very clearly defined, the commission that's paid is also very clearly defined. This was a directive called BOD 49, the Board of Directors. I know it's a great name.
BOD 49?
Yep.
Fantastic.
That stated what level of commission could be paid on those products. And so, again, while the independence then becomes even, again, very pertinent, because it doesn't matter whether it's a red, a blue, green, purple product, whichever company that may be, it's the same level of commission is paid regardless of product. So when I like to show people a comparison of different providers so you can see why I'm recommending a particular company to you, when it comes to life and critical illness cover, it's purely driven by the premium that's charged by that company.
Okay.
And then we would be paid a percentage of that premium that's generated as a commission. And it's typically 50% of the first year's premium.
Okay.
And then there's an ongoing commission payment from subsequent years of contributions.
Obviously a much smaller percentage.
And it's a much smaller percentage,
Right, okay.
yes.
All right then, so that's how life insurance and critical illness cover works. What about things like, one of the things I guess you do is you look at savings plans. There are millions of them around that people can choose from if they want to. But they are, contractual savings plans that, depending on how they work, you would be tied in for a certain amount of time. There are lots of different, variances. But, they are contractually
And that's why I've
agreed.
been quite, again...
It's broad, I know.
We're trying to be broad, but equally to give an insight, because as you quite rightly identify, the timescale and the contribution can vary massively, and actually sitting down with your advisor to identify what the right term and the right contribution is. And again, another cheesy line, but one that I like, it needs to be consistently comfortable. So it's an amount that you can afford on a monthly basis that doesn't interfere dramatically with the rest of your expenses and costs over the course of that month.
That's reasonable.
And this is an area that in the past, and which led to that BOD 49 ruling, because it applies to these products as well, to make sure or to try and avoid the, how should we say, overselling of the product, i.e. moving away from that consistently comfortable contribution level to a point where, while it looked great maybe while you were here, or indeed, again, dare I say, people like to exaggerate the salary and then minimize the expenditure. When you get to know someone, you start to get a far better understanding of their real costs and expenses of the lifestyle that they lead. I mean, classic example, I earn X and I always have half of that left at the end of the month. And then in a few months' time, so okay, well, if that might actually equate to quite a large amount of money. Where is it? And perhaps I wouldn't be quite as hard-hitting in my questioning, but my point being is that people often think they have a lot more left at the end of the month than they actually do.
Which goes two ways, doesn't it? Well, the first thing I'm thinking there is, how well are you really budgeting, first of all, but second, be realistic.
Be realistic.
As we've said a number of times, one of the really important requirements when you talk to somebody about your personal finance is being honest with the advisor, because they need to have a clear picture, but it's also you being honest with yourself.
And that's even more important. And if one of the key takeaways, I always say, even if you take none of the advice that I give you, you should have a far better understanding of your situation.
For sure.
Because when people write down those numbers or see it on paper, it's very often shined a light into an area that they probably just tried to shy away from and thought, oh, I don't want to look at that too closely.
I spent years doing that, so yeah.
But where I was leading to with this, I mean, the regular savings plans are probably an area that have had, as I say, mis-selling. Yes, let's be honest about it. Overselling, getting people to commit to a much higher level of contribution for a much longer period of time than whether they necessarily realised, but certainly hadn't appreciated what they were committing to. Because you said it right at the beginning of the introduction to this section, that they are contractual savings plans. You have agreed to save that amount of money for that length of time. Now, they do have flexibility, and there is a level of movement in that, but nonetheless, you shouldn't enter into those contracts with that thought process in mind, which is why my view has always been start low and build up. Going back to what I've just mentioned, because that's a much easier conversation in a year, 6 months, a year, 2 years' time. So actually, I've been saving X, but I can actually add another 10% to that. I haven't missed. What I want to, at the review time, I want people to say, yeah, I haven't missed that. Not to say, wow, it's a real struggle now to do the...
Too much of a stretch.
Yes.
Yeah. So, and that's back to your phrase, isn't it? That consistently comfortable phrase. I know you've probably said that a million times, and it might be a little bit cheesy, but there is a lot of truth in that.
Yeah.
If you can do it, and it's like, I know I'm doing it, and it's great, and it's but it's okay, then it's okay.
Yes.
If you see where I'm going.
And then we can build from that. You've then got the commitment. You've got it's become a habit. You've formed that habit. You've got used to, well, actually I earn X, but it's always X minus 5-10%, whatever it may be. Yeah. And I'm living comfortably on that. And actually, I can now increase that percentage slightly. And then we can build that up. Because I know what happens. People look at they go through the retirement assessment and work out that they need a number. And then they reverse engineer that number back to a monthly figure.
Yeah.
And then they say, right, that's what you need to save. And you've gone through the process. Everyone's got very excited about it. They've seen, I need that. They commit to that number. But actually, that number's too much of a stretch at this point in time. So it's all well and good saying, yeah, I'm going to do it. As you mentioned just now, the New Year's resolutions we're going to come on to. You sign up for the gym. Yeah, I'm going to get in the gym 3 times a week. I'm going to lose whatever kilos. By February, you've already lost.
February, if you're lucky.
If you're lucky.
Yeah. No, I'm with you.
And again, it's a similar strategy. You've got that initial enthusiasm, and you're really passionate about it. And then suddenly reality hits. The car breaks down. The washing machine packs up. I don't know. You have to move house. Whatever it might be, or worse, really serious. You lose your job. Then it's, this is a commitment that I'm really, really struggling with.
Well, life happens.
Life happens.
Things change. So,
and that's just the normal course of events, rather than also perhaps a less scrupulous advisor who squeezed that client harder than they perhaps should have done.
Right.
So there's, again, always often two sides. And again, so I'm not trying to defend, but equally, not every case is a pure mis-selling, although don't get me wrong, there certainly has been. The other one being the length of time, i.e. is it 5, 10, 15, 20 plus years? And that's an awful long time into the future that you're committing to.
Okay.
So why I again mentioned that in the past, the commission that was generated was based upon the contribution and the term. So you can see that for the less scrupulous, it was very beneficial to stretch both, long as possible and as much as possible. Now, again, that earns you a commission payment now, but again, perhaps I know I'm slightly odd, but my view is always try to do the best for the client you're sitting in front of, because if you take the slightly or even indeed significantly lower level of commission now, but you build that client relationship and you keep them for 20 years, you'll earn way more.
Well,
and do a much better job for them in the meanwhile.
That's taking a long-term view.
It is taking a long-term view, and maybe 20 years is extreme, but I have now, 21 years here. So these products have matured. They have rolled them over into other products. They have been very happy with the returns that they've received. They have, actually, I am still here. I am now being promoted numerous times, or I've changed jobs or whatever it might be. Yeah, maybe I can't commit to a 20-year term, but we can certainly do another 10 years, and probably because they're earning that much more, they can save twice the amount that they started on when we first started this journey.
Okay.
So, and again, just to going back to those rules that came in, again, great name, the BOD 49, the Board of Directors, the 49th directive, that the commission is much, much reduced. It's the same as the life insurance. So it's based upon the first year's premium and then an ongoing. So again, it's to try and discourage that overselling.
Right.
Just to be aware of that.
No, okay, I'm with you on that. And what about a lump sum investment? Sometimes, people, I don't know, make a big bonus or come into some money from, I don't know, a will, whatever it might be. What about in situations like that? Because, that, I guess that's a little bit harder to work out.
Again, there are so many more factors. Yeah, how much it is. And it's harder to missell that, I would argue, because you've either got the lump sum or you haven't. You're not manufacturing the lump sum out of nowhere. However, what then can happen is there's numerous potential opportunities to earn additional commissions, fees from a lump sum investment. There's the platform or the wrapper or the portfolio, the investment that the money initially goes into. That can pay a fee, a commission. Again, that has also restrictions here in the UAE because of those regulations, which are great. But it's below that. Start to question if you start to see, how should we say, more specialist investments being recommended to you.
Okay.
It's not a household name that you recognise. Most of the funds that we would use, you would know the names. I don't know whether we're happy to talk about them, but the JP Morgan, the Goldman Sachs, the HSBCs, the Invescos, Investec. There's 5 or 6 that's off the top of my head, but there'll be names that you would have probably seen on a hoarding somewhere, maybe a sports event. They're household names
that if you Googled would come up.
Names if you Googled would
regularly.
come up regularly. Yes.
Okay.
And you would see they have many, multiple hundreds of billions under management.
Yeah.
If you're then being recommended a product that perhaps you don't recognise, doesn't have the immediate result on Google that. Yeah, here they are. They've got X 100 billion under management, or trillions with some of these companies. I mean, it's mind-boggling amounts of money. Vanguard, if you're talking ETFs, there's another big one that springs to huge investment. iShares, which is BlackRock. Again, I would ask the question, why is this being recommended to me? Now, it may be it's a great product and it's one that has a great track record. Fundsmith might be one that springs to mind for that. Very bespoke, specialist investment fund that's been running in the UK. Terry Smith, fantastic return. But he's not tied to. He's an independent fund manager. Runs 2 or 3 funds. That's it. But if it's a name that doesn't spring to mind, doesn't seem to have a huge amount of assets under management. Again, that's not to necessarily knock it. That might fall under the, as I've mentioned before, the core and satellite. It could be that it's a really good satellite fund, but it's just triggering a thought process and a further questioning.
Exactly, more questions. That's the point,
because there has been the case that those more specialist funds, shall we say, are being recommended because they pay an additional fee or commission. And I think right back at the beginning when we started these sessions, there was some news about a particular fund that had actually closed, and they were paying significantly greater levels of commission than the industry norm and offering very impressive rates of return.
Yeah. So if it's too good to be true, if it sounds
it
too good,
comes back to that. Absolutely,
it
the
is.
old adage: if it's too good to be true, it probably is.
Okay.
There are sometimes exceptions, but normally they're not there.
Okay.
And so that's just more of an aside. But again, ask the question. If your advisor won't answer it, be concerned.
Yeah.
If they haven't got a reason for why. This fund is great because we like it, because it's in a particular sector. You have asked me, maybe you're looking for some, going back to last week's ethical investments. They would generally, not all the time, but be a smaller investment because they're not as popular in the mainstream. Fine. But if it's, as I say, something that's not getting those answers, then yeah, raises a concern.
Exactly, and the point is, isn't it, that you need to be able to ask those questions. If those questions can't be answered, that's a red flag.
Yes.
But there's no reason for not asking those questions, and you have the right to do it. And I guess a lot of people don't. It's kind of hard talking about money, and I understand
it is hard
that,
talking about money. But if you've taken the trouble to sit down with someone, then. I've always said part of this process is education, and while I try and impart as much information as I can, equally it's always that balance that you need to also be engaged with the process.
Well, exactly, but you're between a rock and a hard place in some ways, in that respect, aren't you?
Yes.
Because you are caught in this kind of netherworld of I'm this side, but I'm also representing somebody this side.
Yes. But going back to the earnings or the commission, the fee, as I mentioned, the wrapper, the initial platform, that will pay us a commission, which typically will be enough to more than enough. Not more than enough. It's a representative amount for the advice that we have given, and that's why I say it that way. Because if someone's then taking additional fees and commissions on underlying funds within it, then they're taking extra money that should be invested on your behalf.
I mean, what you shouldn't expect, isn't it? If you want to go and take financial advice, you should be able to go and talk to somebody independent, somebody qualified, somebody licensed appropriately, and there is not a fee just to go and sit and undergo that kind of introductory process. That would be unusual, I think.
Yes.
And therefore, the alarm bell should be ringing in that case.
Now, generally, I would suggest that that commission is to cover that initial advice process. Becoming more common now is that then there's an advisory fee, typically 1%. There's an annual ongoing fee that then covers the advice that you receive, for the reviews, any switches that may need to be made, any changes to the portfolio, adjustments. But again, what I should emphasise, if you're dealing with someone like ourselves or any regulated advisor, you would receive a reason why letter that will explicitly break down all of these fees, all of the costs, all of the charges. And you're asked to sign that document. We also have an independent compliance department that will then call you, record that conversation, and send a copy to you. So again, it's all just to make sure that those fees and costs and charges are all completely understood by both parties. Because again, going back to our previous point, we try and give all the information to you, and sometimes there's an assumption that you've understood and you know what you should, assuming does, but equally, if someone's saying, yeah, it's fine, and you've run through it, how many more times do you go back through it? Whereas just to have that...
Look, there's an element of this. There's a simple element of this that, talking about money is difficult because it's private, it's proprietary stuff. But there's also some of the jargon used is a little bit, and it sometimes, and I don't mean to be rude, but I know you'll take this in the spirit in which it's intended. It's not the most interesting stuff at times. It's not, because it's not that easy to understand.
When I'm ringing you up and saying, 6 months have gone by, we need our review, and nothing's changed. Why is he getting so excited? Why is he so desperate to see me? Well, from our side, it's because it is so important.
Yeah.
But as you rightly say, I've done that. I've addressed it. I only saw you 6 months ago. But actually, what's changed in 6 months?
But a lot of the time, this stuff is not. It's not very sexy, is it?
No.
Really, it's not very. Sometimes it's not as interesting as it needs to be. It's hard to.
But I think.
Approach these matters and make it engaging, and I take your point entirely. Where you say, look, do you understand? Everything is. Are you happy with this? Yeah, it's fine. Just go ahead and do it. So that follow up is actually really important.
Yes.
Do you really understand? How this works?
Because again, one, it's to protect you as the client, but it's also to protect us as the advisor, because there have been instances, and again, perhaps I'm being unkind, but selective amnesia is the phrase that we refer to it as. Right. A year down the line, it's all documented, you were happy, yeah, go ahead, and then maybe your circumstances have changed or something has changed your mind. You didn't tell me that, you didn't tell me the other. Well, yes we did, because it's documented in a written form that you've signed, and there's a compliance call as well.
The other thing as well is people do things and maybe don't listen as much as they should.
Yep.
There's that side too.
Yes, which again, going back to that, have you understood everything? Are you happy? Yes, let's go. And actually, it has our relationship been strong enough at that point for you, as you say, that's a stupid question. No, it's not a stupid question, because I'd rather you ask it now than come back in 6 months' time and think that you've been misadvised.
Yeah. Okay. So let's just sum up very briefly, because I want to get onto the kind of checklist for next year as well. But the thing is here too, and I appreciate you being transparent today, James, too. But you need to ask questions. You need to be clear. You need to understand what you're doing. And the overriding point, I think that you're trying to get across today is that any good qualified advisor, appropriately licensed, should be happy to discuss how they are remunerated.
Absolutely, 100%. And if they're not, well, my advice would be to walk away and find someone who is, because all of the above is available from many places. There are many reputable companies here in the UAE. Why deal with someone who's not?
It's a good point. James Thomas is an independent financial consultant. He's here with us this morning. That's talking about how he specifically is remunerated in the products that he advises his clients on. Leave us a like, hit subscribe wherever you're joining us from. Get in touch. Let us know what you think. As always, you can contact us, info@mira.fm. If you have a question in any way, there's also whatsapp.mira.fm. And remember, anything that we do is available to listen or watch again. Just search for Mira Business FM wherever you get your podcasts from.